Welcome to our comprehensive AUD/USD analysis covering November 3rd through 8th, 2025. In this presentation, we'll examine the Australian dollar's significant decline against the US dollar during this critical week. The pair experienced 6 consecutive days of selling pressure, testing major technical support levels. We'll explore the fundamental drivers behind this move, including the Reserve Bank of Australia's policy decision and broad-based US dollar strength. Our analysis incorporates data from multiple authoritative sources, including TradingView, ActionForex, Forex.com, and Daily Forex. We'll provide both short-term and medium-term trading recommendations, identify key risk factors, and outline critical support and resistance levels. This report was prepared on November 10th, 2025, and reflects the most current market conditions. Let's dive into the details. The Australian dollar experienced a sharp decline during the week of November 3rd through 8th, falling 2.4% from its late October highs. As of November 8th, the pair was trading at 0.64931, showing a modest daily gain of 0.21%, but down 0.79% over 5 days and 1.36% over the month. The price action has been decisively bearish, with 6 consecutive daily declines pushing the pair toward critical support. The day's trading range was 0.64675 to 0.64992, with volume reaching 74.93 thousand ticks. Most significantly, the pair is now testing the 200-day exponential moving average support zone at 0.6440 to 0.6460. This level represents a crucial technical juncture. Technical indicators show a neutral overall reading, suggesting market indecision at this critical support level. The question now is whether this support will hold or give way to further downside. On November 4th, 2025, the Reserve Bank of Australia held its cash rate unchanged at 3.60% in a unanimous decision by the Monetary Policy Board. This hawkish hold came after inflation picked up in the September quarter, squashing market hopes for a rate cut. RBA Governor Michelle Bullock stated clearly that the board didn't consider cutting, signaling the central bank's commitment to maintaining restrictive policy. Following this decision, all of Australia's Big Four banks revised their forecasts, now expecting no rate cuts until 2026. Initially, this hawkish stance provided support for the Australian dollar, as markets interpreted it as confidence in maintaining tight monetary policy. However, this positive effect was quickly overshadowed by broader market forces. The dominance of US dollar strength and intensifying risk-off sentiment in global markets proved more powerful than the RBA's hawkish positioning, ultimately leading to continued weakness in the AUD/USD pair. The US dollar exhibited persistent strength across all currency pairs throughout the week, with the dollar index maintaining elevated levels despite some intraday volatility. This broad-based strength was driven by multiple factors working in concert. Post-Fed policy expectations continued to support the dollar, with markets pricing in a prolonged period of restrictive monetary policy. Safe haven flows intensified as risk-off sentiment dominated global markets, particularly amid heightened equity market volatility and tech sector valuation concerns. The Australian dollar, as a commodity currency and risk-sensitive asset, was among the worst performers during this period. 4 key contributing factors amplified the dollar's strength: continued U.S. economic resilience relative to other major economies, weaker than expected manufacturing PMI data from China, Australia's largest trading partner, adding pressure on commodity currencies, and persistent concerns about global growth. The AUD simply couldn't withstand this perfect storm of dollar-supportive factors. Let's examine the key technical levels that will determine AUD/USD's next move. On the resistance side, we have 4 important levels. 0.6713 represents the 38.2% retracement and medium-term bearish invalidation point. 0.6706 is the recent high and major resistance. 0.6616 provides short-term resistance, and 0.6546 to 0.6550 marks the monthly, open, and 50-day EMA. On the support side, the most critical level is 0.6440 to 0.6460, which combines the October low with the 200-day EMA. This is where the battle is currently being fought. Below that, we have 0.6400 to 0.6413, representing the 38.2% yearly retracement and psychological support, 0.6372 at the June low, and 0.6200 as a major support target. The technical outlook is clear. Price is testing critical 200-day EMA support. A break below 0.6440 opens the door to 0.6400, while a sustained move above 0.6550 is needed to ease bearish pressure. The technical pattern reveals a descending pitchfork formation extending from the yearly high, with price action consistently respecting the upper and median boundaries throughout its decline. The bears achieved a significant technical victory by breaking through the median line following the RBA decision, confirming bearish momentum. However, 6 consecutive down days now signal potential exhaustion at the lower boundary. Let's review the technical indicators. Oscillators are reading neutral, with potential oversold conditions developing. Moving averages are also neutral, with price testing the critical 200-day exponential moving average support. The MACD on the weekly chart shows bearish convergence, indicating momentum remains negative. The RSI is approaching oversold territory, nearing a critical threshold. While the descending pitchfork pattern confirms the bearish structure remains intact, the combination of 6 straight down days and oversold readings suggests near-term selling pressure may be reaching a climax, though the overall trend remains bearish. For the next 1 to 2 weeks, we expect AUD/USD to trade within a defined range of 0.6440 to 0.6550. The initial bias is neutral with a bearish undertone. Exhaustion risk is high after 6 consecutive days of decline, suggesting a potential pause or bounce. The key level to watch is 0.6440. A break below this support opens the door to 0.6400. For traders, we have 2 strategies. The sell strategy involves fading rallies to the 0.6550 resistance level, with a stop loss placed above 0.6616. The buy strategy looks for a bounce at the 0.6440 support level, with a stop loss below 0.6400. The risk-reward profile favors short-term range trading, as market indecision creates opportunities for both directional plays within these defined boundaries. Stay disciplined, use proper position sizing, and don't chase moves outside the range without confirmation. This is a trader's market where patience and precision will be rewarded. Looking at the medium-term outlook for the next 1 to 3 months, we have 2 probability-weighted scenarios. The bearish scenario carries a 65% probability. In this scenario, sustained USD strength continues amid persistent risk-off sentiment and China economic weakness. Strong U.S. economic data supports the dollar. Risk-off sentiment persists globally. China's recovery remains sluggish, and commodity prices stay under pressure. The target range for this scenario is 0.6200 to 0.6300. The bullish scenario has a 35% probability. Here, the USD weakens on dovish Fed signals, while risk sentiment improves significantly. Weaker U.S. economic data emerges, the Fed signals a dovish policy shift, China's recovery gains momentum, and risk appetite returns to markets. The target range for this scenario is 0.6700 to 0.6800. The probabilities reflect current market dynamics, but remember that markets can shift quickly based on new information and changing conditions. The 0.6713 level is the most critical technical juncture for medium-term positioning. This level represents the 38.2% retracement and serves as the medium-term bearish invalidation point. A break above 0.6713 signals potential trend reversal, with the downtrend from the 2021 high possibly complete. It would indicate a shift in market structure favoring AUD strength and open a path toward 0.6800 and potentially 0.7000. Confirmation requires a daily close above 0.6713 with follow-through buying. For bullish positioning, enter above 0.6713 on a daily close, with a stop loss below 0.6616 and an initial target of 0.6800. Conversely, if price holds below 0.6713, it signals the downtrend remains intact with sellers maintaining dominance. This would point toward continuation toward the 0.6200 to 0.6300 zone. For bearish positioning, enter on rejection at 0.6700 to 0.6713, with a stop loss above 0.6750 and an initial target of 0.6400. Wait for clear confirmation before committing. False breaks are common at major resistance levels. Let's examine the key risk factors that could impact AUD/USD. Upside risks for the pair include weaker than expected U.S. economic data, de-escalation of geopolitical tensions, stronger than expected Chinese economic recovery, and a dovish shift from the Federal Reserve. Downside risks include persistent strong U.S. economic data, escalation of risk-off sentiment, further weakness in China's economy, and an unexpected dovish turn from the RBA. Regardless of which scenario unfolds, trading discipline is paramount. Never risk more than 2% of your capital per trade. Use strict stop-loss orders on all positions. Monitor key levels closely, particularly the 0.6440 support and 0.6550 resistance. Stay informed about economic data releases and major news events. Maintain flexibility to adjust your strategy as market conditions change. Remember, successful trading isn't about being right every time. It's about managing risk effectively and staying in the game long enough to capitalize on high-probability opportunities. Let's summarize the 5 key takeaways from our analysis. First, price action shows a 6-day decline, testing the critical 200-day EMA support at 0.6440 to 0.6460. Second, fundamental drivers reveal that the RBA's hawkish hold was overshadowed by USD strength and risk-off sentiment. Third, the technical outlook shows a bearish structure with near-term exhaustion risk building. Fourth, the short-term outlook suggests range-bound trading between 0.6440 and 0.6550 with a neutral bias. Fifth, the medium-term outlook indicates the downtrend continues unless the 0.6713 resistance breaks. For next week, focus on the Australian employment data release, U.S. economic indicators, global risk sentiment shifts, and the technical reaction at the 0.6440 support level. Market conditions may change rapidly, so trade cautiously with proper risk management. Thank you for watching this analysis. If you found this helpful, please like, subscribe, and turn on notifications for more Forex market insights.